and wait for Zoom to catch up, and then I will get started. Let's see. Bear with me. It's deciding to listen. Okay. So now that that is good and ready to go and all things are put where it's supposed to be, welcome everyone to the Super Easy Beginners class. My name is Jennifer Baker. For those of y'all who don't know me, I think that everybody on here does. As you guys know, we kind of go over this. This class is just mostly going over anything to do with basic structure, any pairs you're looking at, simplicity specifically, or just anything to do with general Forex. So the scalping I usually do in the mornings is kind of separate from this. It's a totally different, much faster paced group. So if you have questions in regards of that particular strategy or those indicators, please keep those there, with the exception of, like, I think the ATM, we can talk about that here or whatever. But having said that, as you guys know, I have to do the disclaimer that says everything we discuss is for educational purposes only. Don't trade what you can't afford to lose. Pretty simple, written twice, literally, because as well as all of you guys know, I'm a huge advocate for this industry can change your life. Like, it truly can go from 0 to 60 in like 60 days. However, there's a lot to learn, and your learning curve could be huge and it could be really small. And of course, we can always, fall back from the huge levels of success we accomplish really quickly and then kind of come back to this mid level. So just make sure that you're taking notes. You're realizing that this is still all theoretical. Everything we discuss in terms of trading and technical analysis is all mostly theory based. So learning to develop your own strategy and rules is what it really comes down to. So bear in mind, anything I say is educational purposes only. It's not legal or financial advice of any kind. So if you have any questions, by all means, come on out or put them in the chat. I think Miss Donna will come on and look at the YouTube chat too, just to be sure, to make sure we're not missing anything, because I usually miss all of that stuff. Hi, Mr. on YouTube. I can see you right now, Mr. Trucking. But anyhow, I added a new slide today because I was talking to my children about this at dinner, and I feel like it's a really under talked about conversation. It's a really under discussed topic, and most people would never believe that until they saw that in real life. So I'm teaching my children in terms of how to compound their money, obviously smaller amounts, but hopefully to get them to a different position in life. And of course, my daughter, who's the bright one, she's the one who's, college bound, and she's the one who is considered an academic. When we talked about what she would choose between a penny, multiplied, doubled every day for 30 days, or $3 million today. So of course she gets the look on her face that teenage girls get. And my son is like, nope, I'm taking the penny. His brain is a little different. It's definitely more entrepreneurial mindset. And of course, she's just losing her mind because not everybody knows this. But I went ahead and added that to this slide tonight because I feel like it's not a really well-known fact that, yes, literally a single penny doubled every day for 31 days is not only 3 million, it's actually $10 million. So when we talk about on these calls how to compound, which I say all the time, I really feel like that's my gift in this industry. I am clearly not perfect. I don't know. I mean, I know close to nothing, next to nothing in terms of fundamentals and stocks and a whole bunch of that side of this industry. I'm just really good at, picking this technical analysis, finding that strategy, and honing in on rules to compound effectively. So for those of you guys who didn't know this, I'm curious to see how many of y'all's didn't know this. Does anybody not know this right here? I'm sure we're working in this industry, most of y'all did. But is anybody as oblivious as my daughter was? Didn't get the Zoom notification. I'm not sure who that is, but the Zoom notifications were dropped in every single chat. But yeah, anyhow, you guys can put welcome and unmute yourself. I'm pretty sure you're allowed. Let me check to see. Hi, Nick. I'm new. I was also highly confused on the MACD. Nick, everything to do with that scalping session is going to stay kind of in the morning classes. This will really slow down and talk about just basic trading, compounding, structure, support, supply, and demand. So this is a really good place to be. So in terms of that custom built indicator, yes, it kind of gives you all the rules, and we can kind of go over that at the end of a class on Thursday morning if you have some questions and want me to break it down. Otherwise, go to the pin post in that group and you'll see like those top 3 or 5 videos or something. That tells you everything there is to know about what each one of those indicators do, what it means, and how to use it. If you're not in that group, you can DM me on Telegram, we can go from there. So I can keep going because I'm not sure. So you should either be in the We the People group on Telegram, or you should be part of the mock Facebook thing on the website. And I assure you, everything that you need is kind of in there. So having said that, back to the penny thing, this was one of those mind-blowing things. So I figured I would put it on this. I eventually want to get my own spreadsheets on here, although they didn't copy and paste nearly as well on the other template, but same information, just to show you what's actually possible. A single penny, 31 days, $10 million. So having said that, that's what we're doing. I know it seems really, really simple. It seems really, really elementary, because it is a very pedestrian topic. When you say have a trading plan, write down what you're doing, take notes, have rules for entry, exit, it sounds immensely like, well, this doesn't help me become a better trader. It sounds like, well, this isn't gonna help me tighten my stop loss, and this isn't gonna help me find that perfect entry, because everybody's looking for the same things on YouTube. They're looking for the same things in every group they join, every membership they buy. They're constantly looking for the, if only I could just do it this way. If only I could, have a non-existent stop loss. If only I had a slightly better entry, or a slightly better this, or a slightly whatever that, then I would be successful. If only I had a better strategy, then I would be successful. If only I had this, this, and this. When the reality is, none of that is going to make any bit of a difference. Like, at the end of the day, what is going to make a difference has nothing to do with the perfect strategy, the perfect entry, the perfect stop loss. It has to do with you having a duplicatable system that is sound and mathematically plausible, first and foremost, that you can handle based off of who you are individually. So that means like psychology and emotion. So just so we're on the same page, again, all pretty simple, self-explanatory, but there's that. So any questions on that stuff? Does anybody have any specific pairs you guys want to look at in terms of simplicity or all that other good stuff? Welcome, Derek, Jeremiah, Mr. Trucking, and everybody else. Okay, cool. I'm going to hit stop share, and we're going to go to the chart. So I might not see the exact, I'll minimize this, share screen. There we go. And now, gotcha. So you guys should all, in theory, be able to see this kind of pretty clearly. You'll know exactly what we're looking at. For those of you guys who are part of Super EZ, you know that simplicity is literally just the most simple way of finding a reversal, to find a counter trend trade inside of this constantly ever flowing market. So it is definitely a counter trend trading system. It is definitely a reversal based system. In general, it is not built to be a trending system. Now, there are ways to help you use it that way. It's just not made that way specifically. So as long as you know that, then we're good. Before we go and start looking at all the pairs, I do want to make sure that we've discussed first that this is NFP week. So please be careful with everything you do US dollar related. Please be careful with everything you do, anything US dollar related specifically. So like the indices like US 30, NAS 100, even gold itself, all of those pairs can and will react potentially to whatever happens with the pre-release on Wednesday, and of course the actual release on Friday. So you could have the perfect technical analysis, but this week's fundamentals are strong enough to really push them anywhere they want. And or what I kind of feel like is worse than that, worse than pushing in the wrong direction, we could just kind of sit still, do a bunch of fake outs one direction, fake out the other direction, and just kind of consolidate all week, making everybody super frustrated and out by Friday right before the move happens. So kind of take that with a grain of salt too. Hey Donna, I see you. We got 2 participants. Thank you. I'll make you co-host real quick if I can find your name. Maybe. Nope. I don't see your name coming up, but she just messaged and said she's on, so I don't see you. If you're there, oh, there you go. I won't let me make you co-host. You're kind of coming and going. Maybe bad reception.
Yeah, sorry, just reconnected. I wouldn't, yeah, it knocked me out and then it just got back on right now.
Well, I can kick you out and put you in a waiting room. That's new. But I'm going to make you co-host.
It's, country Wi-Fi at nighttime, so.
That's okay. I'll making you co-host for now. So as long as you don't get kicked out, you are good to go and you have full access to everything, I think. So,
Okay.
All right, cool. Well, so let's take a look at a couple of the pairs that I was looking at. The indice or the index that I'm most fond of right now, I guess we'll go there first because that's the fastest mover, the one that everybody really wants to discuss and talk about. We're going to get a German 30. In terms of finding a trade that is not, this was just, we were playing around in class this morning. But in terms of finding a trade that is not going to be as affected by this week's crazy stuff in terms of NFP, this would be your go-to. However, there is something to do with the GBP going on tomorrow. I don't know what it is, so I'm not well versed enough to be the person to talk about it. I would just say go to my FX book, go to investing.com, do your due diligence, because whatever this situation is can also leave a huge impact on the market. So kind of be careful. But as you can see, this was a trade we kind of took on the scalping system this morning that never closed out. It's using the ATM to manage. But we're looking at this trade, we're looking at it for a sell. So not obviously on this time frame do we have that kind of set up yet. But as we scale down in time frames and we start looking for an entry, keep going down. We got in obviously much earlier because it was a different system than this. But keep going down one more time. And probably one more, actually. It's probably going to take us one more. Notice that we're kind of flattening out. We definitely have that M formation, and we're starting to really give us this push to the downside. So I'm going to go one more time to the downside, to the smaller time frame, to find that simplicity. Oh, we're getting the buy. So really bad example here. Sorry. But either way, you guys get the point. This is much smaller time frame. We're looking for the sell is what I'm looking for. We're stuck at all-time highs in terms of most of these indices, and where the most of them have already pulled back, this one has not yet. So overall target, I would ignore this right here. This is drawn by an EA that we kind of use quite a bit. But even entering from where price currently is at, and price currently is at 14030, 14031-ish, give or take. Anywhere even coming to the bottom of this Fibonacci box, that's still 300 pips of a profit. Coming down to kind of previous support is 1,000 pips. So my first take profit on this pair particularly, and we don't have the simplicity arrow just yet, but you can see we're kind of in this neutral zone on RSI. We're in between buyers and sellers, right? So we have kind of an in-between arrow. Granted, this is the 1 hour time frame, right? So either way, as we break through where price is really low, and I'll zoom in to show you where this candle has stopped, all the candles have stopped here. So you can have an option to put a pending order for a sell somewhere around right here. And I'll make this yellow to show the pending versus green. As you can see, it's already, we're already in that on a different reason, but yellow. Ta-da. So yellow entry. So as soon as we kind of break this zone, if we do break this zone, my first target is going to be in and around here. And I'm going to zoom back out so we can kind of see other targets and potential areas for a take profit. You can also have another target anywhere in here, but I'm looking for the slightly bigger move, and that's going to be here. A lot of colors on this chart, a whole bunch of colors. Let's see. I'm going to go to blue. Check. Gotcha. So still a lot of pip kind of potential. Stop loss is up to you. You can go from previous high. You can go from the lower high, kind of tighten it up a little bit. But like we've discussed before, and I talk about all the time, a tighter stop loss doesn't always mean make a better trader. It doesn't always mean more net profitable either. So tight stop loss just means less room. And that's a good thing if you're willing to get in and out a whole bunch, and that doesn't mess with your emotions and it doesn't mess with your psychology. That's a great thing. Like, it's phenomenal. But if you do get really emotionally involved by getting in, getting out, getting knocked out, small win, small gain, waiting for your move to happen, having a tight stop loss should not be your goal. Having a consistent net profitable strategy or rule set should be your goal. So this is definitely something I'm looking at. My stop loss would be up here, first take profit there. And you can even do one more slightly tighter one. I'm kind of going off of where candles have stopped before, the bodies of each candle. So in and around here, these are going to be my targets in terms of German 30 on the sell. No guarantees. We're already in it on the scalp for a little bit longer. If you're looking for a re-entry now, you can go down to the 1 or 5 minute, wait for it to pull back up and get a tighter entry. If you're looking for the later, looser, kind of more confirmed move, wait for it to break that 14020 area. Remember, it's an area, not a straight line. Lines are just easier to draw. Wait for it to break there. Your first target is going to be about 400 pips away, 900 pips away, and 1400 pips away. So that's definitely not a bad way to be. Depending on your lot size, that is an insane amount of money. One trade, one time. That's it. And you shouldn't be in too much trouble. But as always, in terms of NFP week, as always in terms of NFP week, please always overprotect your profits a little. I used to not trade at all in terms of NFP week because of how I traded. Now I still am willing to scalp, but if I am in the market for this week, I'm always a little overprotective. I'd much rather get my baby wins than be knocked around like a like a rag doll. I don't want to be stuck in that area at all. So, any questions on German 30 specifically? Let me go here and see on this other group. If you have any questions on YouTube or in Zoom, please put it in the chat and let me know. There's going to be a lag though, so I'll kind of wait up a little bit. I'll wait up or slow down, however you say it. All right, cool. So if there's no questions in terms of German 30, this is what we're looking at. I will go ahead and go to my next favorite. If y'all were on with me this morning, you know that what I'm looking for mostly is still this buy on gold. So no, whoopsie, I moved that line. No guarantee, unfortunately, that this is going to play out being NFP week. And we're still in this market is definitely looking more like it's favoring the sells. However, there's some room to kind of finally push up for a little while. If we go to the huge time frame, which is the view we've been looking at in our morning calls, this is a huge up move. This is the down. We're breaking the previous low here. So I know this is a really ugly zoomed in view, but as you can see, we made a lower low on the weekly time frame. Here's our previous low. We beat that. We also have now officially cleared previous structure to the left. So definitely looking like we've got some downward pressure. Just in between that downward pressure, I'm looking for the pullback. I'm looking for the buy short term that's potentially there. So going down a little bit in time frames, seeing what we're seeing. This has been the time frame we've been looking at as well. Bigger time frame, huge move to the downside, pull back, huge move again. We are at an area of interest. This is where price has stopped before. So this is a really good place for price to kind of finally pull back up and give some of those drops down, give them some of them back a little. So that's what I'm looking for. Now, granted, I am not the only person who has been waiting for this buy. We've taken a few of them and been right. I think we took some of this sell on a Head and Shoulders last week. No, some of this sell on a Head and Shoulders last week. But still, now we're waiting for the buy yet again. So if I zoom in 4-hour time frame, notice we definitely have some divergence going on. And if you don't know what that is, divergence is basically when your oscillators or your other indicators are showing you something different than what price is, right? So the money and the volume aren't matching up. So what's actually happening and what's the momentum is telling you is they don't line up. That's what we call divergence. So got a downward kind of angle here, and I guess I can draw it slowly here. Let it go. It's a little crooked because we don't draw on MT4. Most of us don't too much. We draw on trading view here. So that's a really clear divergence. Like there's no way that's not, it's clear as day. We've got these impulses, and now of course we're kind of in again that neutral zone. We've surpassed it, we're coming back out of it, and we're looking for it to kind of come back up. So even if we only get enough volume to come retest that area, even if we only get enough volume to come up to this high, that's still 260 pips, approximately 328, give or take, to the previous low, which we have yet to kind of respect at this point. And then, of course, moving above and beyond that, you have all the way up to here, 700 pips from your current area. Whether or not the fundamentals are going to line up to give us enough of that, we don't know for sure. But we still know that there's enough room here to give us that safe room for a buy. So honing into a smaller time frame. Let's see. Minimize one more time. Much clearer view on that divergence. We are above the 55, which means we're in buyer's territory now, right? We're kind of bouncing and rejecting off of the 50 right now. We're just consolidating, kind of to be expected this week. We're going to see more of the same in terms of this. But we've got our full body candles. Notice that they're mostly bullish candles. Then, of course, there's a doji and a little pullback. Full body momentum candle, engulfing candle, and then tiny little pullback. So either way, we're in a box, we're in a zone. So we don't want to necessarily take this as a scalp in terms of looking for the money right now. But in terms of a swing trade, and we're looking for something that we could potentially have multiple take profits on and hold for a couple of days, this is it. So 1 hour time frame, we don't yet have our buy signal on Simplicity, but we almost do, and I'm willing to bet with reasonable, we've definitely got it on the 30. Our breakout, we came back, we retested, and now here's where we're at. So we're currently in a bearish candle. We don't buy when prices go in the opposite direction, or more accurately, I don't buy when prices go in the opposite direction. But you have a really good area of interest. You're at the kind of the top of the Fibonacci zone, or the hot box is what Uncle P calls it. You're still back into neutral. So if you were to take this as an entry, we can talk about potential take profits. Of course, your stop loss could be here for the tighter one, or way beyond this if you're going to give this room to actually breathe a little bit. So zooming out real quick, I think we already had some targets drawn for this. But from where price is currently at, even just as that pullback, just to kind of come up and retest that high, staying in this consolidating market, you still have 70-ish pips. That's not bad at all. That's a really good, simple way to go get your couple of pips. This is going to be a really tight kind of version. I'll have to zoom in to get a little bit better of a view. This is where your previous super easy support and resistance thoughts were, right? That's going to be what, probably 140. And I think we have one more. That was 80, 70, 160. And one more all the way up to this area. All the way in there. So at any rate, it doesn't matter what, if we come all the way up here or not. All we're looking for is our some pips. Can we get some pips out of this that makes this a reasonable risk to take, a reasonable investment to take? And at least for right now, the technical analysis is saying yes. So we have the structure, we have the divergence, we have a couple of our signals and our systems that, or strategies that are saying this is a go. You have right now this kind of pulling back. So that's fine if you want to hone in on a smaller time frame and wait for that kind of bullish candle, that green candle, that buying candle to come in and kind of push us in the right direction. That's totally fine. To wait for a doji, a bounce off of the 50, a rejection of any kind, totally fine. But also a really, really good kind of trade to keep your eye out for as well. Okay, does anybody have any questions about gold or have any specific pairs you guys wanted to look at? And then pull up one chat and then pull up the other chat. Nick, what group are you in? Coming over here to check the other chat. Participants. Okay, gotcha. So you're only in the advanced membership group? You don't have actual simplicity is what you're saying, if I'm understanding you correctly? Do you have this indicator? Oh, Donna will send you a key. She'll get right on that because she's the admin for that group. But then yeah, you have access to all the super easy stuff. So if you're in the discussion group, she can make sure you're added to the We the People group, and that's where that file is that I was talking about. So once you have that file, in the very top of it, there's hundreds and hundreds and hundreds of hours of videos, YouTube videos that you can kind of go through, listen to the squeaky voices in the background, and the first three are super important, but after that, you can just listen in. There's tons of nuggets. There's lots of information, not just my own, people who were seeing things differently or who volunteered to share their screen, and you'll learn from what they did right and you'll learn from what they did wrong too. So, but welcome.
Hey, Jenny, can I intervene quick?
Yeah.
Nick, if you're looking just for your license, follow step 3 for the installation video. It'll tell you all the directions on where to send the info to receive your license. And then I will issue the keys. And then for the signals group, once you do join that, just scroll back in the comments or the discussion group, you'll see Jenny's link was posted yesterday to join her group as well. I will post it again tomorrow, but if you wanted to join tonight, that's where you can start. So.
Told you she's in charge of everything. She's the boss. But okay, if there's no questions on the pairs that we looked at so far, and you guys are super, super conversive tonight, let's take a look real quick at GU. Somebody had mentioned this morning, I think it was Cordelia, there is a GBP event tomorrow that supposedly is huge. As you guys know, I'm not too fundamentally inclined, which I think in many ways saves my brain space to be specific on what I'm doing for the um, technical analysis and doesn't make me overthink everything. Obviously, though, there are some downsides to it, so we have to at least acknowledge that. But 30-minute time frame, GBP USD, you definitely again have some divergence. You have a W formation, and all we're looking for is a measured move. So longer term analysis, this definitely has a bunch of room to go up. Potentially, if we're looking at the super higher time frames, this has a ton of potential. Now, unless you're planning on holding this trade all year, that potential is almost insignificant, right? So we have to take that like anything else, with every bit of other information we're getting here and decide how we're going to use it. But for right now, being NFP week, and of course everything we have going on tomorrow, do you want to take the counter trend trade or the trend trade in a week like this? So can you go over how you use your measure move and what time frame? Yeah. So Connie, let's use this W as an example. A measured move was something that I heard actually Scott say quite a bit, and I know that I originally first heard about it in the Market Maker group, which is that really really long book and set of videos that is intense, right? But they talk about measured move. They talk about, or one of the groups talk about a measured move. So when you get your M's and your W's or your harmonics and your, what is it, head and shoulders, every single one of those patterns, these are all theories, and mind you that, but the theory is they have to make or are supposed to make a measured move in, equal to or greater than their original, right? Let me mute you, Nick. You finally unmuted yourself, but right now you're not talking. So having said that, take this M right here, for example. Some people take the larger side. I usually go more conservative. I take the smaller side of the measured move. So this is the smaller side. Let's see. From the center of that M up is 93 pips. From the center or on this side, you have 120. We're not going to count that wick. That's craziness. So 120-ish. We're going to go with the more conservative one. So 93 pips. What that's saying is if we're going to trade this like we would any other M, is when we break the neckline of this M, you're going for a minimum of 93 pips. That's your target. Now, I don't ever do just one thing. I always kind of combine it with other theories and perspectives. So if I knew this was a measured move of we're just going to round it to 90, and I happen to have a quarter point around here, or I happen to have um, an ADR low somewhere around this window, I'm going to choose that as my final target. I'm going to say, hey, this ADR low is like 87 or 86 pips. That's my target. If I happen to have a quarter point at 82 pips, I'm going to say that's my target. If I happen to have a Fibonacci ratio or an area where the Ichimoku Kinjinsen, if I'm saying the right one, has stopped before the peaks that we look and use as stop losses and take profits, right? I'm going to use a basket of information as to reason for why those are. Or, of course, if I look to the left and I happen to see, hey, price has stopped here before and that's my 90 pips, that's about what I'm looking for. That's my final. And I'll look for structure for my other ones. So it's never just one thing. But the measured move theory is that if you have this peak, your head and shoulders, once you break out of the neckline, you're going to have at least the move that you have from the breakout of a head and shoulders is said to be at least as big as the shoulders, right? Not the head, but at least as big as the shoulders. Some people like to fuss and argue that the move you have from a head and shoulders is going to be at least as big as the head. Well, is it possible? Yeah. Guaranteed no. Again, I'd rather always be conservative because I can re-enter than have some pie in the sky take profit that I can't duplicate and I don't end up hitting, right? So that's kind of the whole theory base between like measured move. And it's just a good way to help teach and kind of help people see, well, why are we doing what we're doing? So take this one, for example, kind of a W formation. We're going to go with the smaller side. Once we break this, and this is a much different side, that's 100 pips. Once we break this neckline, you're looking for a minimum of 100 pips or somewhere around that target, right? For our take profit. Same thing with down here, kind of perfect W. although that's already played out. This one's already played out by far. 30 pips, you've already more than cleared that. A lot. So now we'd be waiting to play out the bigger one on the bigger time frame. So does that help answer your question, Connie? Do you see what we're saying when we're saying that? Gotcha. But that's how I use it. So never just individually. It's always also with structure or something else. It just gives me that the foundation. Most people try to overthink it and, oh my goodness, well, what if it wasn't the exact number? No one cares if it's the exact number. It's not a straight line. It's not an exact point. It's just an approximation. And the more comfortable you get with that, the easier all of this really becomes. It becomes really, really simple. So, but okay, so back to GBP USD. I am looking for a buy on this. Mind you, it's NFP week. Mind you, we've got some nonsense going on with GBP. Anybody know exactly what that is again? Cordelia explained it real well, but I don't want to butcher it because the odds are I would butcher it. Either way, we kind of pulled back. We spent the afternoon kind of pulling back, so going to where price currently is. Your first take profit is anywhere around 40 pips, give or take. Your next take profit is going to be about 80 from where price is currently at. And then, of course, you have about 120. That's a lot of pips. So especially on a Forex pair where you can really manipulate the lot size, you can really, really compound with this lot size. You can go to the tiny time frame and use like my scalping strategy on the 5 minute and just take every single buy that you are awake for in between here and there. And you can use the same kind of compounding that we do and hit like half of that spreadsheet in give or take the next 48 to 60 hours, depending on obviously that this plays out properly. And if not, either way, you can have a pretty reasonably tight stop loss on this trade, which is a blessing, though could work against you because we could definitely wick down, clear this area, and then continue. So take it with a grain of salt, but definitely an area that I'm looking at as well in terms of GBP USD. And actually, for Connie, we're going to go to NAS real quick because I was seeing the potential head and shoulders form on this. Wait for that to load. Who's that? Oh, unmuted. Ab. Okay. 30-minute time frame. I'm going to close this out this time. And this time we're going to kind of draw a little bit. We never try to predict. I mean, there are indicators that try to predict the formation of harmonics and head and shoulders. And I find them to mostly be obviously presumptive, but they have to repaint by nature, and they are often inaccurate, right? But just for conversational purposes to talk about what that head and shoulders looks like, we'll kind of draw 3. If this does end up forming a head and shoulders, which is possible, not guaranteed. I don't know that they're going to allow this to drop that much. They might because they have in the past. Come on, silly butt. We could see NAS come all the way down to anywhere in this area, just shy of that other head, which last time measured was like 3,700-ish pips. That's not bad at all. And then the same principle applies. If this does form the head and shoulders pattern, right? What we'd want to see is at the break of this, hold on, I'll try to clean this up a little bit. No one ever said I was an artist because I'm definitely not, at least not in this. What we'd want to see is this to actually break the neckline. So this is the neck, anywhere in here is the neck. If price does break that, you're looking for a measured move of at least, assuming it's down to here, 5,000 pips of the buy. Same thing on this side, 5,000 pips of the buy. So if I zoom in, that would make our target. Let's find out together. So if this plays out, that's your first sell. That's 3,000 some odd pips. Wait for a really small time frame entry. Your next is, again, approximately 5,000 pips. And then you'd have another. Then you have to survive the pullbacks that come with this, guys. Let's just keep it real for a minute. 5,000 pips. So that's 15,000 pips if this ends up playing out that way. That's a lot of pips, a whole bunch of pips. So I'm curious to see if that's going to happen. But that's how I would use that measured move. Connie. I'd use it just like that on a moment like this. So I'm not going to predict that to fall because we never pre-fill out a pattern that isn't there yet. There's a lot of traders that do. We just see it potentially setting up. It's not a thing yet because it doesn't exist yet. But if we do continue to push, we know that a target isn't going to be just we're aiming for this. We're going to first aim for the proper other shoulder. If we surpass that, we can still have a slightly deformed head and shoulders. If not, if we surpass the head, then we're waiting for a retest and a continuation. Or we know that this pattern was never made and is therefore invalid. So just some basic feedback for you and a potential setup that I'm seeing. 30-minute time frame, you've got your sell signal. I definitely think we have some potential to get down. By how much? I don't know if we're going to get the whole shoulder out of it or if it's going to be a little crooked and lopsided, but definitely to the Fibonacci zone, which is that's a good amount of pips all by itself. From where price is currently at to 2,000-ish pips. And what's one of my favorite pairs? What's your favorite pair, Connie? You guys know I've only traded indices for the most part. Indices and gold and GU. That's it. What is your most all-time favorite pair? But yeah, that's what I'm waiting for. Come down to here, anywhere in this area, come all the way up. That's because US 30 pays like a bank. It pays like a mafia. That's why. It definitely pays like the entire mafia. It's the most expensive, most fast-moving, volatile pair. It's by far the best. Like, big smile on my face. You learn by watching my videos. Oh, that's awesome. You can come unmute yourself in class and hang out. You're good. And once you have 30 entries following that exact strategy, 30, 25, 50, once you come and you share those, then we'll go over, we'll tweak it, and we'll just kind of work our way backwards, right? Kind of like, backward engineering. So we'll go through those entries. We'll find a few actionable items that you can do and implement like now to go slightly improve your accuracy or your net profitability. So some of you guys are at the point where it's not your accuracy you have to worry about, but only your net profitability. So your accuracy is already all there. It's there enough to be profitable. It's the management that comes down to your net profitability. So either way, congratulations, and I'm glad. I'm really happy. Okay, but that's it on those pairs. For the most part, I was looking for some other setups. You guys know, would you trade US 30 during Asian session in London? Brandon, I talked to this morning, so let's go to US 30. There's a guy. Well, there's lots of guys, but there's a couple of guys, and they're really cool people. They started with Super EZ. They were always looking for the way to master US 30, and this was a handful of years ago, right? And they said they had found the way or found somebody who knew the way to master US 30. And it was exciting, right? So there was a handful of them doing it. There was people in the market maker groups who were promoting this and were selling it. And then somebody sold something for some amount of insane money. But to answer your question, I'm going to say no. The volume isn't there in Asian session. Not to say it's never in there in Asian session, but the bigger moves isn't there. So you can take trades that happen during Asian session, but like as your go-to trading time, I wouldn't pick Asian session for US 30. I will tell you there was times like when I was just on a call, I was listening in on calls with other with Forex or whatever. Let's zoom in real quick and show you. And I would just literally wait for kind of like my strategy to line up. I would take a couple pips. If I got stuck in consolidation, I exited. I would be kind of on the phone, hanging in my office with my feet up, kind of thing, and wait for something to line up. Take a couple of pips. If price had come anywhere near the 50 again, I took an exit quick, right? I got out quick and just kind of would play around that way. But on the 1 minute time frame, look how often you get thrown around. So let's zoom in. Let's make this a little bit more pretty, less ugly. Simplicity could clean it up a little, but you get thrown out around quite a bit. So here's your buy. You come down here, you break down. You'd break out here, 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 here. So it's 1, 2, 3. 3 losses. 1, 2, 3 bigger wins. I mean, those wins are much bigger. They would definitely pay for those small losses. but just plan on being chopped around. Because if you've heard me talk on all the rest of the calls, Brandon, you've heard me say stuff like, some people try to tell you that you'll never make money if you don't trade London. You'll never be a good trader if you don't, stay up for the rest of your life and never sleep like a normal person again. Which honestly, that frustrates me a little, because if I go to this template, let's do this real quick. Okay. So this is literally just a sessions indicator, right? This is US 30, 15-minute time frame. So this is New York, this is Asian, this is London. So London pretty much just only has the stop loss boxes. Here's the cool part. So we're in this gray, this light bluish box is Asian. So this goes to show you that technically the answer is yes, you can make money in Asian. You can make money in New York. You can make money in London. You can make money in Asian. You can make money in New York. You can make money in London. You can make money in literally any session. And if I dropped any pair on here, every pair to an extent is going to have moved at some point during some session, no matter what, right? So feeling like I only am allowed to trade this time of day is silly, because there are going to be moves. This is Asian. As long as you know how to trade like ATR versus pip counts, because the ATR is going to be smaller in Asian session than it is in London or in New York, you can have a ton of success in any session. I just don't feel as though there's a lot of volume, and this kind of shows that to be the case. There is enough volume in Asian. This is the beginning of Asian, right? Huge drop. That's enough to make money. Not on this time frame, but again, this is Asian. This light blue box is Asian session. So just so you know, do you have videos on your scalping strategy, John? All that is in the advanced membership group. I think it's step 3 or step 5 on the website. Terrence, what is the yellow indicator on your chart, and what are the settings? Which yellow indicator? This one? Which one? Terrence, if you're a little more specific, I will try to help you. So Brennan, yes, you can make money. It's just about knowing what time frame to trade.
Hey, Jenny, I have some questions.
Okay. Well, while we're waiting for Terrence, John, and Brennan to be a little bit more, I don't like Asia and London session, but I was told I was leaving money on the table.
Sorry.
No, it's okay, Donna. I'll get those in a second, but thank you. And thank you for telling me, or I wouldn't have known to look. Brandon, honestly, if you love New York, then stop listening to me, stop listening to everybody else, and say, hey, I'm doing this for my own personal freedom.
Okay.
I'm my own personal money.
Okay.
Donna, are you talking? Hold on. I was going to mute her. Anyways, back to Brennan. Tell everybody to, start listening to you. Now, can you leave money on the table? Yeah, you are. Do I leave money on the table? Yeah, I am. But there's money and there's peace. And then there's also the whole concept of the more you trade, the more you lose. So you can have the world's best morning and then be like, oh, well, that stinks. I handed that all back. That's kind of sucks, right? That's what most people do, who say, oh, you're leaving money on the table, bro. No, you're doing this. And oh my goodness, it's just, what's going to happen is you're going to catch this sell. You're going to get chopped up and beat up. You're going to miss this buy because your feelings were hurt. You're going to take the sell right before this buy happens. At the end of the week, you're going, well, I suck at trading, right? Versus this is my schedule. If the setup is there, I take it. If the setup isn't there, I don't have to work today. I get to go to the park. I get to go on a hot date. I get to do whatever. I get to go volunteer at this little nature trail, right? You have all the possibilities in the world, but sitting in front of your chart 24/7 should not be even one of them. So under the smiley faces. So one person at a time, and then we'll get to the questions on YouTube. Smiley faces, yellow indicator. I have a 250 moving average. That's the only yellow thing on this chart. Let me pop up a time frame to see if I'm wrong. I could be wrong. It's under the smiley faces. So here's our smiley faces. These are smiley, right? So if it's on the simplicity template, these are just support and resistance. This is a 250, and then these are Fibonacci hot zones. That's all they are. That's all that's on this chart. So okay, gotcha. The 250. Hello, I'm changing jobs and will work mornings 5 a.m. to 4 p.m. Eastern Standard Time. What would be your, ooh, Davin, if you're scalping, I would scalp before 5 a.m. Um, or I would plan my lunch around it. But that's how I trade, in all fairness. You have to realize that the information you're getting is coming from my bias. My bias says, I've got 3 children. I want to be a functioning adult. I don't like getting up for London. And I don't mind every now and then if I had nothing better to do to catch some trades in Asian. But between 4 p.m. and 6 p.m. is not a great time to trade. So take that off of the table. The spread is high. The market moves are usually not very predictable. So it's not a great time to trade. You can try Asian, you can try swing trading, or you can try taking that kind of London open in that time, is what I would do, Davin. And then there was another question. John, I answered your question. You are welcome. I'm going to go to
Hey,
YouTube.
Jenny.
Hey, how's it going?
It's Lucas. How are you?
I'm good. Long time no hear from you.
I know. Thank Derek. Derek is like constantly just reminding me of these meetings. It's been a rough year, but I'm back, and I'm glad to be. I'm glad you're still around. So,
Hey, honestly, Lucas, I'm going to give a shout out to Derek and Barbara and a couple of the other people who are just seriously, they are the best, most loyal. Like they are here, they help people, they answer questions in the chats, and they'll kick you in the butt when you need, and they'll definitely be a bodyguard. But they are so loving and so supportive that I could not do any of this without them. Just so you know.
yep, I totally agree. I'm telling you, like he just like every week he's just like, here's the link, here's the link, here's the link. And I just, I finally just got around to like, hey, like I miss my family. Let me get back in here. I have a question, by the way, too.
Okay, come on, give me your question.
All right, cool. Let me close that real quick. Okay, so Jen, can you kind of, I don't know, I just jumped on. Can you go over, let's just say on a scalp, right? Regardless of pair.
If it's
The thing one of my hurdles right now is figuring out, you know, what the calculated move is. So in other words, how do I mark the prior low and the prior high?
Okay, that's a really good question. So
Yeah.
let's do this. Let's go to US 30 is at all-time highs, so let's not go there. The German 30, because that's also all-time highs, but it's a little cleaner. So I'm gonna go to chart window. Let's go to a brand new chart, a naked-ish chart. I'll go figure. That's a bad pair because we have an open trade on it. We're gonna try this one more time. There we go. We're at NAS 100 because we've got to pick something we love. Kind of a naked-ish chart, right? This is reasonably naked. It's got a 50 moving average on there. We're going to go to a bigger time frame. So if you're scalping, we don't care what's going on the 1 hour time frame. We don't care what's going on the 40 or the 4 hour or the month view, unless we're at super key significant areas. We're only looking for a scalp. We're looking to catch a baby move for a quick moment, and then we're looking to ignore the rest. The reason why the whole picture matters right now is because we are at all-time highs right now. We are at all-time forever always highs. I mean, this is as high as it's ever been, right? And so I actually did a great breakdown of like the 2008 crash and some other stuff that I don't know if I was alive for. I'm just joking, but all this other stuff, he did a great breakdown of what this was. But the reason why it matters right now is we are at all-time highs. So you have to know that, because it's going to change the way this is moving. So having said that, we know that the all-time high, we're going to draw it up, is going to be up here. If I were to do this, Lucas, honestly, because I was taught so many different things by so many different people, and that just turns into like a brain mess. Like you have misinformation, over information, and differing information. You can't do anything with that. So one of the things that I do consistently is I go to the line chart, I ignore everything else. So that really cleans it up, doesn't it? But it's quite different. So no more drama, no more worry, no more concern. We obviously don't have a peak here, so that doesn't matter. But now we're going to go to the smaller time frame, a little bit closer to where we're at, since we're scalping. If I were looking for a scalp and I was on this time frame, I'm just literally going to use the line chart. So if you want where do I start? Like if I was starting at 1, this is where I would start at 1, and just go through all 28 pairs or 4 indices or whatever, half dozen or dozen pairs you're looking at, and do this every Sunday. Mark up some spots, at least 2 or 3 above and 2 or 3 below on the 1 hour, the 4 hour time frame. Anybody can do this. Your child, your 5-year-old can do this. So do that. So prices, remember the price is the gray line. So I want one peak below. I want one peak above. And this one's even better because we've got multiple touches, right? So price is somewhere in between there. So if I'm buying or selling, these are going to be my first targets or my stop losses or my look at me areas, right?
And this is, I can use this on the 15, Jen, you're saying, Jen?
You can use it on any time frame. You can use it on whatever. So if you're just, remember, I've got this one guy, he's got like 90% accuracy. He's stinking amazing. However, he got so carried away with doing this, he ended up having like 50 lines. So don't get over carried away by going to every time frame and finding every peak. Just go one or two above. And if you can't see any structure nearby, go to the next higher, to the next higher.
Okay.
So if I do this on the 15, I'm going to go to current price. Notice how the low is still pretty. I'm good. I'm not going to pay attention to this one. This one was just made. The high, I still like it. I'm going to put one here. I'm going to clean this up a little bit now that we're on a cleaner time frame. We've got more touches in this area. And remember, it's not going to be exactly perfect. And you'll see that once we go back to candles.
This is way better than what I was doing. Yeah, this line is super awesome. Okay, cool.
Now watch, if I go back to candles, you're going to notice that this is going to honor the body of the candle. It's going to dismiss the wick. It's still not going to be perfect or dead on. So this kind of honors the bodies of where the bodies have stopped, where the bodies have stopped. Bodies, right? I think there's, oh, that's the song. I was thinking about it. Sorry. Body, yada, 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 yada. That song. Anyways. So this right here, the bodies have stopped here. So it just cleans it up. You don't need more than 2 above and 2 below. I mean, unless price is shooting in one direction, you don't need more than that ever.
Okay. And then Jen, so when you're, okay, I'm a little behind, but so when you're saying, I need to re-listen to some of your older calls, but when you're saying like, you're looking for a 1-to-1, so can you do like a GU real quick?
Let's put a
GU chart.
Maybe.
Maybe.
Hey,
Jen, did I ever send you those necklaces?
I don't think so.
I sent them to, okay, shoot. Okay. I sent them to Donna, but I don't think I ever got, okay. COVID hit.
I told you no. I was like, no, at first. And Donna was like, just give them to people you know. And I said, okay, that's fine then. I said, yes. So
yeah. All right. I'll get to the post office this week.
Otherwise, I always tell everyone no. I'm like, yeah, no, you can't have my address.
No, give them away. Exactly.
Right.
I put them on eBay.
Right, Derek, if you want the truth, when people are like, I want your address, I'm like, yeah, even if it's for something good, I have to really know you to give you my address, because even today, and you guys heard on that morning call, my Telegram was beeped through. My entire Telegram on my computer, I had to uninstall it because there was a weirdo in there, and then on Facebook, and it was not okay. So personal boundaries are really important of, wait a minute, but Lucas, I know you're cool. I know that you're an awesome person. So by all means, I'll give the necklace out to the church. And then there's actually a lady here who just, I think her daughters would love to sell them. I think that would be good for their little.
Cool. No problem. So, okay. I got plenty. I have like 50,000 of them still.
I know, right? Okay. So having said that, GBP USD 15-minute time frame. Let's go to, scalping.
Scalping, yeah.
Okay. So let's go. I'm gonna. This might not be enough, but to stay consistent, let's work with what's in front of us. I'm not going to go fish for my best case scenario. I'm going to stay with where we've got in front of us. So same concept. If I'm too confused, if I'm too lost, if I can't find out, oh my goodness, what's happening, wicks, bodies, colors, what, oh my gosh, and I'm freaking out, a really clean way to do that is just go to the line chart. Once you're at the line chart, if price is here, right? Notice you can figure out where price is pointing to by going to the line chart. It's kind of pointing a little bit to the right, might even start pointing down, but that gives you a nice clear picture, particularly on higher time frames, but different topic. So same kind of concept. I'm going to start with where price has kind of been before. Here's our peak. There's some peaks in this area. So this one's really close, especially for a Forex pair. That's not a lot of pips, something you need to pay attention to. So I don't like it that close of a zone, but this is a Forex pair, so my perception is a bit biased, right? We're going to go here.
Where'd you go? Oh, okay. Okay.
So notice how price has kind of stopped here. Now this one, you can have a couple of different schools of thought. You can go with this big, huge move because this is an impulse move coming to retest this in center of this impulse move. It's not a bad idea. You definitely have some peaks that are honoring that. But the most consistent way would be to look for the most recent peak, which means you would move it down to here.
Okay.
This previous low was. This one has not yet been broken. Then same thing with the buyers. This one's really close, so I can't go off of that one. I'm going to have to go here. Plus, this one at least has 2 touches. So no, why I'm not going to this one is because there's only one, and this one has 2 touches. It's a little bit farther. So take that again with a grain of salt from where price is currently at. This is a Forex pair, not a lot of room, but still something to look at. If
Okay.
zones, if I'm on the 15-minute time frame and I'm looking for some potential target areas or areas of interest, right? Potential areas where I'm going to get held up or might stall out, trading in the zone style, right? Great book. And I don't like how big these zones are, or I'm not finding enough of them or where I need them to be. I can pop up a time frame. So 30-minute time frame, this really cleans it up a little bit. This shows me, well, this target's really small. I mean, that target's insignificant. Like it's almost not worth taking, at least for me. So if I were to have analyzed this specifically on the 30-minute, it would look different than what it does. My lines would be somewhere around here. First take profit here instead of here. So you notice how I moved that. And then same kind of concept with the sell.
Okay. Cool.
It would just be slightly of a wider range to kind of look at.
Sweet. That really helps, Jen.
Well, awesome. I'm glad that helps. And do this with every strategy, the golden strategy, the simplicity. You'll get your zones and you can get your measured moves and you can still use ATM. It just gives you some look at me areas. So
sweet. Thank you so much. That really helps me.
You are welcome.
And good talking to you again.
Yeah, you too. Hey, stay safe and you take care of those kiddos, okay?
Yeah, you too. Thank you.
All right, awesome. Okay, so I'm going to go real quick. What time do you get up to trade normally? I'm up about, Brandon, you're a rock star. I'm working on becoming in the 5 a.m. club. A really good friend of mine's reading that book. I guess I need to put that on my next to read book. I'm usually up no later than 6, but I do come into my chart a lot of times, but I still want to have time to like not pick up my phone like at all, not check messages, not text, Facebook or whatever, but not pick up my phone whatsoever and just breathe, pray, meditate, drink water, do all those other little homeopathic things. And then I usually spend a good 15 minutes kind of either setting up alerts or checking out for any trades that may or may not have been setting up overnight or that I can quickly enter before I do either work out, go, make the kids breakfast, depending on the morning, take a walk, or just either way, not be in front of my charts for a good hour and a half or so. But I'm almost always in my office by about 8:30. I catch those moves if an alert wasn't, sent to my phone or sent to my watch in the interim of time. So real quick, let's go to the YouTube questions and see. Let's see. Hey, Jenny, how long have you been trading? Since 2016. I have never traded London either. On US 30 and NAS, I wait for my signal in the 5-minute and for my confirmation, and that's it. And I said an email and wait, that's all. Yes, see, you've got it. Freedom, right? Money is great, but if you can't duplicate what you're doing and you have no freedom to get it, then it really has no value. So for you to have an email alert with your laptop or desk has to be on the right. I'm not sure what you mean, but yeah, I have all my stuff sent to my MT4 on my cell phone. So, or I use TradingView. I use that custom built indicator in the advanced membership group. I get everything I need, mostly on the 15-minute chart because I don't want to get bounced around the market so much. I mean, if you're scalping and only getting a baby amount, the 5 minutes great, but otherwise, I like the 15. It's just a little smoother, a little bit less alerts because there's 4 or 5 pairs I trade actively. So on the 5-minute, that could be as much as like 100 or 200 alerts a day. And that it's a little bit painful. So to have that many. Let's see, for you to have an email alert, laptop or desk has to be set on right. I don't know how to say your name, but I use a VPS. VPS is in the comments of this YouTube video. A VPS is like the solution to 90% of problems traders face. And I know it has a cost. There are some free ones or next to free ones. There are cheaper ones. The one that I used is one of the best ones in the whole industry. They just have the best service, not because I say so, but because they are. Having a VPS solves most of your problems. Everything from having an EA, trading with bots that are literally making you money while we're sitting here talking, a manager that manages your trades, which is one of the biggest things I use it for, but also all of your files, your indicators, your MT4s, your passwords. If anything happens on your computer, you lose everything. if anything happens on my computer, my VPS is still running. I have it all. And if something does go crazy, my VPS people, people for that mentality, they fix it for me. No problem. It's kind of perfect. It is a great way to be. So you have to have that turned on unless you're using TradingView. TradingView is a free alternative too. Well, I think you get up to like 2 or 3 alerts, not very many, but some. Waiting is very critical for stocks and indices. Wait for the right moment and don't chase the market. That's all. Yeah. I wish you could, you can't unmute yourself from YouTube, but I totally agree. I don't know much about stocks except for the fact that there's a basket of them in the indices I trade, and then, a very small amount. So better to have a VPS or remote desktop. Yeah, parallels will not work for that, at least for the same reason. Anthony, I will get to you in just a second. 5 minute only. I like 1 minute for US 30, just so you know. If I was to be scalping live, like in front of a computer, I'm going to take 3 or 4 entries on 1 minute US 30, and then I'm done for the day. On NAS, German 30 gold or GBP USD, and I'm live in front of it, not just alerts, I'm going for the 5 minute. What broker do you recommend? Michael, please look at the video. My favorite still is Hugo's Way. I have 3 in total that are in this chat or the comments box. Hugo's Way just has great customer service. So click on each one of those links. They are affiliate links, so you'll get a slightly improved rate and I get a few cents. But honestly, Hugo's Way is just the best in terms of customer service. They're great in terms of withdrawing and everything else. AFX has really high leverage, so you can make a boatload of money if you're doing high risk stuff. And they have no swap if you're swing trading, but their spread is higher. LQD is good because it has a tiny, tiny spread, a little bit lower leverage, and because I might be running a copier service through them for anybody who's part of the Super EZ family only. Also, do I have to stick to one trade at a time, or do I include spread in my plan? Do you have by chance have a trading planner chart that I can utilize to help me with my 50 trades? Yes, and it depends on if you're doing high risk or low risk. If you're doing high risk, then you need to be with only one trade at a time. If you're doing low risk, then you can be in a handful at a time, depending on what broker you're using. So we'd have to really, really be sure of what you're doing. If you're doing, and with what broker and with what amount, there's so many variables in that question that there's no way to give you a fair, exact answer, just so you know. But I think those are all the YouTube questions. Anthony, you had your hand raised. What alerts do you have set? Connie. Okay, Connie, real quick. The alerts that I have set are, I have some trading view alerts for a couple of EMA crosses that kind of line up with the golden strategy. And then that's on trading view. And otherwise, if Connie, you're in the morning class. So on Thursday morning, remind me to show you my other broker. That's the broker that I just have alerts coming out of only, so I don't actively trade on it at all. I just wanted something that I would never fail to get my alert. And I have that on its own broker platform that I run a bot on as well. And so the bot is kind of working on the side, and I get my alerts on the other side of it. And that's all 15-minute, because I don't want my phone going off 24/7. So all of those alerts are 15-minute alerts is how I do that. So you're welcome. Brennan, that compounding sheet is awesome. So you are welcome. That is absolutely awesome. But I think that answers most of your questions. I don't know how to say your name, person, Sophia, yeah, if I'm saying it. Please don't hate me if I get it wrong. I barely get regular English right, so no hard feelings. I really want to honor your name. But for a low risk on a 500 to 1 leverage on a $500 account, you can, and you're not trading an index, you can probably, there's too many variables. A really good foundation you can use is watch your margin percentage level of availability. If your margin level percentage of availability is less than 1,200, you need to close some of your trades out. If you're trading high risk, you can get that down as low as 500, but 500 is really, really high risk. Like you're willing to blow it all to make some. Owner of VPS is a virtual private server. It's like having a computer that's always running without having to leave yours always running. And that just means you can not have to kill your computer, unlike some people would say. My Windows always dumped out on me all the time. I'm not that Windows savvy, but somehow my MacBooks last me forever. But different strokes for different folks. Anthony, did you have a question? Right.
Yes, I did. Yes, I did. I apologize. I was trying to eat in between your in between your statements. So I'm very new to trading. I actually took the Musing class. I saw in one of your videos you guys recommended him. I went back and took that class and did some studying off of baby pips. I do have both the simplicity and I have the easy pip system. I've been kind of using the simplicity system more, and I'm hoping I did see beginner class on this. That's why I joined the class for today. But I'm just trying to make sure that I'm trying to go by rules and try to be mechanical and really use the rules. And I've been using the sheet to log my trades, but I'm really trying to make sure that I'm executing the trade right and I'm following the exact rules you guys are saying. So I'm just trying to see if you can just go through the rules with simplicity on what I should be looking at to execute a trade and what I should be doing before I enter a trade. That way I know that I am taking trades that are for less than, I don't want to say secure, but are more by the book trade, so that I know that I'm following the process correctly.
Okay, well, first of all, let me say you get 5,000 high fives because to be mechanical in trading is to be successful in trading. Like, I'm sure somebody has something way wiser than that than me to say, but if you can truly make this a mechanical, this is my job description. I look for these trades based off of these reasons. I see them or I don't. I manage it with X, Y, and Z, or I'm not allowed to be in the trade. And you keep it that simple. No feelings, whether you made 10,000 or lost 10,000. I'm talking, think of whatever number, puts the chills in your bones. I don't know what that is for you. We all have different set points, but whatever number that is, I mean, imagine winning $46,000 in a single trade and or blowing a $46,000 account. If you can look at all of that as mechanical, you will be an amazing trader, like in really, really short amount of time. Having said that, simplicity again is a reversal based system. So I'm assuming you are going to Uncle P's classes in the morning, correct?
Yes, I did do the class this morning. I got it last this weekend. It just passed, so I did do the class this morning. And I try to watch as many videos as I could. But yes, I did do the class this morning.
Okay. So I'm going to first off say he is a great trader and an even better man. So having said that, his style is going to be a little different than mine. So nothing he says is meant to contradict, because he talks all the time about how scalping sucks. It doesn't mean he hates me. It just means he's not into scalping. Nothing I say is meant to contradict anything he says, but to be transparent, we use this system differently. And I think there's some takeaway from that too, because when you learn this system, or my strategy or anybody else's strategy, or you can go spend $5,000 on something really stupid. It doesn't matter what it is. You still have to learn how to apply it to how you physically see things. So now that I've got all those disclaimers aside, I know he has a few ways of seeing it. So this is not to answer how he sees it. I'm going to tell you what I would do. So my first question is, are you looking to be a longer term trader, like, multiple days, or a shorter term trader, like multiple hours? Are you willing to take a boatload of trades per week and a little bit more losses, or kind of slow and steady wins the race? What kind of trader do you want to be?
I'm looking for maybe a little more of a couple of more hours type trading. I really like to look at maybe a day or two is the longest that I would like to be in a trade. And I'm pretty much a work from home person. I've been working from home for about the last 3 or 4 years. So I do have a lot of time in my day that I spend in front of the computer, and I do have time to use. So I do have time to look at it. I've actually probably spent in the last 2 weeks, I've probably spent at least a good 10, 11 hours looking at charts and looking at you guys' videos, trying to figure it out. So I would say more trades, trying to make sure that, I get my win percentage up, but I'm willing to take trades. And I really want to learn. And I know that taking losses is part of the learning process too.
Well, first off, I love your attitude. You are the kind of person that makes it worth working with, just to be, and that's not just kissing butt. It's true, right? Because we work with people from all walks of life, but people who understand that they have the capacity to get somewhere else. So first off, let's address your first part. Notice this is a 30-minute time frame, right? From the time we get this signal, that's 2:24, all the way to here. So 224 is 191 candles. Let's look at the time difference between these trades. And this happens to be a winning trade. But this is 224 all the way to the next signal, which is 226. That's a 2-day trade, 30-minute time frame. So if you're honestly looking to only be in this trades for, let's say, a couple of hours, you have a billion different ways, and that is not an overstatement, but a billion different ways of how to do that. But I would say kind of stick, I know Uncle P likes the 30-minute too, but stick with the 1 hour, the 30-minute. Pretty simple, right? You can use this multiple time frames with confirmations. Like I'm only going to take a 1 hour signal if it's in the same direction as the 30-minute, or I'm only going to take a 30-minute entry if it's in the same direction as the 1 hour kind of thing, and do it that way. It gives you a little bit more confirmation. But please don't get caught up in the, well, the 1 minute says something different than the 5, and the 15 says something different than the 30, and the 30 says something different. Don't do that, because I promise you, the few times where all of these line up, what that's telling you is that the price is pushing really hard in one direction and you're not ready to buy it anyways, right? So what, you don't want them all to line up. You don't need them all to line up. So don't get tripped up on that too much. Make a decision. And from how you sound, at least from the few minutes talking with you, you seem like you're capable of doing that. So when I say make a decision, I mean, make a decision, write it down, and actively do that for 50 trades before you're allowed to change it. That means even if I say something, Uncle P says something, you get to make the decision and actively go do it before you tweak it. So make a decision that says something on the lines of, I'm only going to take 30-minute entries, or I'm only going to take 30-minute entries in the same direction as the 1 hour. You can do one or the other, right? That's going to give you kind of more confirmed, less entries. It'll give you kind of shorter term trades. 30 minutes, still a smaller time frame, to be fair, because this right here is what, that's the 22nd, just to give you an idea.
So I've recently been checking all my trades on the 15-minute. Like I think I did 3 trades today, and I took them all on the 15-minute time frame, and I was confirming them off of the 30-minute and the 1 hour. Sometimes I would go to the 4 hour too as well, just to see what the 4 hour was showing me.
Okay, well, you can do that. And if you want to do that, that's fine, but do it for 50 trades. I mean, no less than 25 trades. So
okay, and you said just to make sure that the trend is the same on the 2 higher time frames.
I don't think I would go to 2 higher time frames. That's too much.
Okay, just 1. Okay.
You could do 1. So find that one that's in the same direction as that next higher time frame, whatever time frame you're using. The 15-minute and the 1 hour go really well. The 15-minute and the 4 hour is a strategy I'm pretty sure Uncle P himself uses. So I think they call it the 415. Don't quote me on it, because I'm pretty sure I'm going to teach you inaccurately. But when you go to his class tomorrow morning, ask him to tell you what the 415 is. This way you get it straight from the horse's mouth versus from me. And then after you kind of go through that class tomorrow, make a decision of how you want to, first off, how you want to use the system. So now that you've got that, your next step is going to be something on the lines of what's going to make you decide to enter, what's going to make you decide not to. The first thing I'm going to tell you is something along these lines. On any system, almost any strategy, unless you're trading overbought, oversold, or unless you're trading, there's another terminology, but like in the zone, your rejections off the channel or the zone kind of thing. Almost any other strategy, trending or counter trending, this is a really good tool that has helped me. You get a signal here. Well, I can't talk. Signal here. First, obviously, you get a pullback. But instead of taking every time we get an arrow, you need price to be moving in that direction. So your rules, in my opinion, would have to say something on the lines of, I would either do a pending order at this level. So once price breaks out of this zone, I'm in. Or of course, you can drop down to that smaller time frame from here and say, okay, I'm going to take the next 15-minute buy. But you have to know that it doesn't always play out that way in terms of indicators, and it never will. So you have to, that's a tricky area. Needless to say, for me, I definitely need the next few candles to be moving in the right direction, or I need it to break out from that zone. Same thing with here. So if I were to take this sell, and this is without checking any other time frame, mind you, I need the next few candles to be going in that direction, or I need to skip the trade. So just keep that in mind. Also, with a system like this, you need to compound in a way that says, I'm not trying to get the tightest stop loss. You will lose more often than you will win doing so, especially with a system like this. And if you don't believe me, that's fine. Don't listen, but then go back and test it for yourself. So if you take this buy and you try to have a super tight stop loss, this one wins out. If you take this sell, you try to have a super tight stop loss, this one loses, and it was right. This one right here, again, same concept. If you have if you move your take profit too quick, you would have protected, well, this was a signal anyhow, but before you made the bigger portion of this move. You see what I'm saying? So the whole purpose of this move is to not micromanage. It's like if you had a manager like the one we have, you would not be moving your stop. You would only be scaling out or scaling back in, but you would not be overprotecting it until you got another signal. That's the way a system like this is most effective, is not going to be getting in and out. It's not even going to be the 15-minute time frame. It's going to be picking almost a single time frame, to me, and saying, hey, I'm going to hold this until I get the counter signal, and I'm willing to scale out or scale back in, but I'm not going to micromanage it. And I'm going to pick 2 to 3 pairs, preferably not over leveraging on a single currency. And I'm going to see how this goes. I'm going to do this for 3 months, and I want to see what my profitability is, my net gain, where I've taken my losses, what this was, what was my total pip count. Because remember, everyone cares so much about the details that they're missing the overall point, which is the overall point is to be in the net positive of pips, right? So to get the most net positive of pips with a system like this, specifically this system, is to pick almost a single time frame. You could do the 30-minute. The 30-minute is going to be a lot, depending on how many pairs you're trading. It's kind of going to be a lot that you need to be aware of. You have to be aware of each one of these entries and any false entries too. That's a lot, especially if you did more than one pair. Kind of give you an idea. So does that help even a little bit?
Yeah, it helps a lot. And I did watch a number of your videos, a number of Uncle P's videos. I was kind of using your tactic of I even though I get the signal, I don't enter the trade until I get for a sell trade a lower low, or for a buy trade a higher high. So that candle has to close higher than the candle that got the arrow on. So I've been using that. I've looked at the 415, and so I've been kind of using the 415 strategy along with just applying that extra rule that you have there. But what you're saying makes a lot of sense. I definitely will look at trying to come up with the rules and then execute them for at least 50 trades. Like I said, I'm tracking the trades. So I have 3 today. I kind of stopped at that point because I know you guys were saying not to be in more than 3 or 4 trades at a time. So I wanted to see those play out and then kind of move from there. But thanks a lot. You really helped me a lot, gave me a lot to think about in the process.
No, definitely. So you definitely, stick with the whole next candles have to go in that direction. But there was something you said, hold on, I'm having a brain fart, sorry. My brain's like, oh, what was it? He said something I wanted to, once you have that, so go to Uncle P's class in the morning, right? Really hone in on the different ways of using something like this. You have, today's being Tuesday, you have Wednesday, Thursday, Friday to kind of, you said you have a lot of hours, go and back test it. So if you decide I'm only going to take 1 hour entries, I don't care what the other time frames are saying. If I did that for 2 weeks on these, 3, 4 pairs, how many trades would I have won? How many trades would I have lost? What would be my net gain or my net loss, right? Write that down and then pick your other way. So let's say you decide that you're going to take only 30-minute entries in the same direction as the 1 hour. Take the same thing. I'm going to trade these 3 or 4 pairs in the last 2 weeks. If I had, caught these moves, right? How many trades would I have lost? What's my overall accuracy in terms of wins and losses? How many pips would I have won or gained? So your stop loss needs to be a structure, right? And do it that way. And then you'll have these 2 side-by-side comparisons. So then it will no longer only be about your feelings. It'll also be about facts, where you can say, if I do it this way, I will have maybe your accuracy is only 70% versus 80, but your net gain is 2,000 more pips than if you had went the other direction. So I would suggest doing that. And then by Sunday, you'll have the back tested data, the decision made, right? And you can actively start that by Monday. But the thing to look out for when doing that is you have to be realistic with yourself. So I'm going to hit Control Y. These are our period separators. Notice you're not going to catch every single arrow. If you're on the 1 hour time frame, sure, there's a high probability you can trade almost every arrow that comes out. But on this, if this came out in London and the majority of the move was made in London and you don't wake up for London, you can't count this as a time you entered. So you would have to do something like, there's a vertical line indicator. I know that we've given it away in most of the chats, but like pick the times where you're going to be available to actually look at the chart. So don't just decide that if every arrow you took, you would be, you know, net profitable by 2,000 pips if you did it XYZ way versus XYZ way. If those are not trades you would have been present for. If you would have not been present during London and it made the majority of its move, like this one, for example, you don't get any of this trade because the odds are you would have woken up, saw this big move happen. You're not going to chase the trade. Hopefully you're smarter than that. So you don't take another entry until here. Let's assume you took a loss on this one. Like, so depending on what your rules are stating, if your rules are saying, once I'm up by 1 ATR, once I'm up by 50 pips, what have you, then I'll be good. Then I'll know I got out of this trade with 50 pips. But you have to be very specific in how you will manage this trade, when you will take the trades and when you won't. This one happened at session crossover. Would you have had the time to catch that or not? This one is kind of Asian versus session crossover again. GBP pair, so go figure. So just be smart about what you're doing. Don't just assume you would have got every arrow that came up, because that is not the case, right?
Right. Understandable. My last question is, and you did point to it, that ATR indicator that you have on the side, is that something we can get free from the market, or is that something that is a paid for indicator, that little?
Anybody who's in the Super EZ group, here's the deal. If I have it and it's free, it's all yours. There's only a very handful of things I use that are paid for, which are the Super EZ indicators. And then of course, once the ATM is finalized, like that trade manager, that will be sold. I didn't build it and that person has a right to sell it. So that is called the bar alert. It should be in every single one of the Super EZ chats. Search that in there. And then if you can't find it, you can message me and I'll get it to you. But it's phenomenal. So this tells you the average daily range. That's not the trading range. Those are different things.
Okay. Got you. That's the bar alert. Thank you.
You are welcome. Okay, real quick, I'm going to answer these couple of questions on YouTube and then we're going to probably jump off. So I don't want to mispronounce your name, but yeah, how does the trade manager work? That is an entire video all to itself, and I would never do it justice. It kind of does everything. It functions in ATR. It allows you to use structure-based stop losses and scale in or scale out, not scale in, but it does everything. So 1 hour and 30 minutes should match. Wait for the arrows and double click the long-term, short-term signal. I usually wait a little bit after the signal and retest to filter false signals. That's a really good, I like that. Yasmin said the 1 hour and the 30 minutes should match. So you can take hers. You can take what you learned from Uncle P. You can take anything I have said in any of the calls you listen to. But at the end of the day, it's real important that you take all those rules, apply them to a time you're actually actively going to be available, back test of how many pips you would have won or lost in the last 2 weeks if you traded these 4 or 5 pairs, right? And take that data, and then you have to actually apply it in real time. So once you have the rules, how you'll manage, what pairs you'll trade, and how you'll determine your entry, all written down, laminate it for all I care. They have nice little sleeves at Home Depot, Office Depot, and check also stuff before you're going to take a trade. Great, you're good. And now do it the same thing, but moving forward versus back testing, go get your 30 trades. And then I personally, on one of these Tuesday night calls, will drag and drop every single one of your entries with you, and we'll see, did you follow those rules? Did you not follow those rules? If you had followed, would you have been better off? Not following, was that more profitable for you? How do we tweak this to either improve your accuracy over the next batch of 25 trades, or how do we tweak this to be able to improve your net profitability over the next 25 trades? And if you're willing to do that, Mr. Mechanical, and I mean that lovingly, by the end of these batches of trades, I can't see how many based off of your learning curve, but at the end of multiple batches of trades, you should see something on the lines of, you're greater than 70% accurate. You are net profitable to some extent. I can't say to how much. Different systems and personalities have a lot to play into that. And then it's about sticking to that, not letting your emotions, your fears, your good moments or bad moments in real life affect that. So, but that's my 2 cents to you, Anthony. So anyways, I won't ask again for any other questions because we already had a lot of them. For future reference, guys, if you have questions, answer them, start asking them toward the beginning. So much easier. And I promise to get to them and to answer all of them. That's kind of what we're here for, is to be of service and to make a difference and be the light. So I hope you guys all have an incredible night. Please, please, please keep your trade journals. Any questions or comments, write them on your desk and then come to the next live class and I will do my best to help you. Either way, I wish you all the best of luck. Take care. God bless and have a great night.
Thank you, Jenny.